Hi, everybody. David Blaine here from Blue Sky Wealth Advisors. Hope you're doing well. I want to continue our 2021 Outlook series today. We're going to talk about the economic outlook. So we had an overview video a couple days ago, and then I did a recap of 2020. So today we're going to start by taking a look at the global economy and what is in store for 2021. So as you know, the coronavirus is the big story of last year and will continue to be so for this year until such a time as the vaccination takes hold and we achieve some sort of herd immunity and get the economy back to normal. Right now, the global probability models that I use and look at are very low recession probability models. Last year, of course, we had the worst global recession on record in modern history. But right now, the probability models are extremely low. So we're not anticipating a return to the shutdowns and economic recession that we saw last year by any stretch. In fact, globally, we're looking at probably a 5.5% to 6% global GDP growth in aggregate in 2021. As you know, there's certainly been a resurgence of COVID here in the fourth quarter and the winter, both here in the US as well as globally in different places. And so that's giving a little bit of a headwind to the total global recovery, economic recovery. But as the vaccine comes online, as people frankly get infected by COVID, I mean, that's the way that a pandemic ends. I don't really like the term herd immunity, but that's essentially what it is all pandemics, all viral infections like this, they stop when enough of the population has developed immunity to it, either because they've got it and their natural immune system is producing the antibodies, or they get a vaccine and their body's artificially induced to create these antibodies. And when the percentage of the population that now has the antibodies is greater than the R factor or the transmission factor of the virus, it will die out. And so that concept is called herd immunity, and you speed it up with vaccinations. So anyway, we did see in the fourth quarter the global PMI, which is the Purchasers Managers Index, slip a little bit in the fourth quarter, recognizing the increased cases, the sort of second, possibly third wave, depending on how you're counting of it. But we do anticipate as we get in deeper into 2021 that these issues will resolve itself. One of the impacts of COVID, of course, was the supply chain disruption. You know, goods coming from China or goods being exported, the whole supply chain was very, very disrupted. And the health outcomes of the different countries are going to drive how quickly those supply chains are either reinstated, number one, or number two, we'll talk about this some more in a minute, but the concept of deglobalization has actually taken place, not maybe in a whole scale, but certainly with key global supply chain goods and services. Countries are rethinking, like outsourcing all of their ventilator production or all of their mask production or those type of things that reared themselves during this pandemic. Countries are now rethinking how that's done. Also, the other impact, COVID treatments, we don't hear a lot about this, but the death rate has dropped. Well, number one, they're getting more data, so the death rate is dropping, and the initial statistics were completely flawed. If you know anything about probability statistics, the early data on the infection rates, death rates, things like that, the sample size was just wrong. But the point is that healthcare is improving and our treatments and figuring out what to do, what not to do. As most of you know, I'm the vice chairman of a major health system, Carolina East Health System, and we've found in our treatment of patients as well as other hospitals across the country, not everybody needs to be on a ventilator, that in some cases it was actually harmful to put people on a ventilator. So those type of things are definitely improving the outcomes for people that still do get it. COVID, coronavirus is a significant but temporary phenomenon. Not the first time we've had a pandemic in the world. It's not the first crisis, but it has been significant. But it's my belief, and it's most people's belief, that it will be solved, that it will go away, and there will be a return to somewhat, normal. So what is normal? There's some trends that we believe COVID has accelerated that were already underway. Number two, it's ushered in another round of large government monetary and fiscal stimulus that I don't believe is going to go away anytime soon. We had in the Great Recession what we thought was unprecedented stimulus. The COVID stimulus by central banks and governments across the world makes the Great Recession look like, a minor event compared to some of the money that we're spending now. So not all things are going to go back to normal. I'd give it, maybe only a 10% chance of things not getting back to some sort of baseline here in 2021. So the flip side of that, a 90% likelihood that as we get through the spring and into the summer and into the fall, that you'll see most of the issues associated with COVID being resolved. Now, there are some genetic mutations going on, and there's obviously some unforeseen things that could happen, but based on what we know now about the economy, the vaccines, things like that, there's a pretty good chance that we'll get back to that. As I said, deglobalization is one of those trends that I think will continue to some extent. Not that all of a sudden countries are going to stop trading with each other by any means, but certain key goods and services will be manufactured in home countries instead of relying completely on other countries. Remote work is a huge one. Some of you right now may be working from a home office, has a lot of implications throughout the economy. And so there's a lot of opportunities. Zoom that we're using here today, we've been using Zoom for a long time, many years, but it certainly increased the economic fortunes of companies like Zoom. The adaptation, of restaurants has been amazing. I don't know about you, but we have a Chick-fil-A here in New Bern where I live, and it's always been really busy. And now they've actually taken over half of the parking lot of the shopping mall, which of course nobody's really going to the shopping mall these days. So they've taken over half the parking lot, and they have, teenagers running your food out from you. They've erected a big circus tent over the drive-through lanes, and they have massive amounts of drive-through lanes. And so you see that businesses that were able to rapidly adapt and that had capital available are actually doing fairly well and able to adapt. The travel and hospitality industries, which have been the hardest hit, hotels, airlines, things like that, they employ a lot of people. And so I don't want to minimize the economic pain in those industries, but in terms of percentage of the GDP, they're still very small. They do employ a lot of workers, fairly low wage workers. So we need to figure out a solution for those folks to make sure they have a way to earn income. But in terms of the economy, it hasn't been, excuse me, it's still a small portion of the economy. One of the other things that we see is the development of the vaccine was a huge success. The speed at which they were developed by multiple companies, it's unheard of. And so I think you're going to continue to see that's accelerating a trend that was already starting to take place, which is biotech and medicine. We've seen huge advances in technology the past 20, 30 years in computers and cell phones and things like that. I think the next 20 or 30 years, you're going to see biotech really take off. And some of these persistent problems in medicine and healthcare and things like that are going to start to be solved, similar to the way this vaccine We put effort into it. We put money behind it, and the private sector really pushed hard. Of course, the promise of governments purchasing those vaccines certainly didn't hurt at all, encouraging to do it, but it was a remarkable success, and I think you're going to continue to see that go forward. As I mentioned, the fiscal stimulus, the monetary policies have been somewhat unprecedented, and I think you're going to continue to see that almost to a sort of a new paradigm. I was explaining this the other day, is I don't like a lot of debt. Most of you in your households keep a reasonable amount of debt, but we've kind of blown through that. You know, somewhere 5 trillion, 10 trillion, 15, 20, you know, somewhere in there, I think the reality of us ever paying that money back went away. And, you know, with fiat currency, it comes down to the confidence that people have in the currency. And certainly with countries able to print their own money, there's a case to be made that deficits don't matter. Now, I personally don't like that, but the reality is we're so far beyond that there is a new paradigm operating, and it doesn't follow any of the economic textbooks that we have. We're in sort of uncharted territory, not just in the US, but globally. And as long as the public is willing to tolerate this type of debt and interest rates stay low and you continue to make the payments, I think you'll see this continue for a while. Austerity, you saw some of that in 2008. I don't think you're going to see a return at all to austerity. You're going to continue to see government stimulus. So I really see three paths. Number one is a sort of a normal resumption of growth rate of, you know, after an initial year of 5 to 6% growth, a normal growth rate, maybe 3%, you know, low inflation, labor markets getting back to normal, you know, 5% or so, unemployment rate, people getting reemployed either in the same jobs or shifting industries a little bit possibly, but that's sort of the normal path. You also have, which I think is the most likely scenario, sort of the doomsday scenario is that we don't have the virus under control, and it continues to infect people. We continue to have deaths. It continues to mutate. The vaccine's not as effective as we thought, which is about 95%. Growth gets stuck in the 1% range, hopefully not negative. And we see deflation. Deflationary forces are actually worse than inflation. If you wind the history books back, you know, the Great Depression in the United States was actually caused by deflation, not inflation. And that's sort of the worst case scenario. Japan has been fighting deflation for many, many years, and it's really much, much worse than inflation. Then you also have the positive case that we come out of the coronavirus, we resume global growth, things get better than they were, lower interest rates, keeping inflation low, and growth rates can actually speed up. You know, I give that maybe a 10, 20% chance of happening. The doomsday scenario, I don't think is any more than 10% really. There are some structural changes in the world that are keeping inflation very low. Last year was about 1% here in the US, and I think you're going to continue to see, it's going to be tough to reach a 3% inflation rate in the short term if things continue on the trajectory. So low inflation, I think, will continue to be the norm. That certainly debt, as I mentioned, high debt, fiscal spending puts inflationary pressure on that. But that high spending is offset by you know, structural deflation, as I said, like we've seen in Japan.